Hello, I'm Ilaria Maselli, Senior Economist at the Conference Board, and this is your Economics Watch brief for Europe for February. An air of pessimism surrounds the outlook for Europe this winter. In a recent Conference Board survey of C-suite executives, 40% of CEOs in Europe cite a recession as one of their biggest concerns for this year. And the European Commission Economic Sentiment Indicator decreased markedly in the euro area in January. This pessimism is most visible in the manufacturing sector. The Purchasing Managers' Index for manufacturing industries fell to 50.5 in January, a rapid deterioration compared to the highs of a year ago when it was over 60. Another reason behind the change in economic sentiment is a decline in the growth rate of global trade. By the end of 2018, global trade growth had dropped to less than 1% year over year. The export sector is key to GDP growth in Europe. Trade policy tensions are surely an issue, but the overall growth slowdown of the Chinese economy also plays a role in the decline of orders for European exporters. It will be up to domestic consumers to sustain growth in the euro area economy in the next quarters. This, however, should not be taken for granted. Even though the labor market continues to create jobs, consumption growth was modest in the last quarters. It increased by only 0.2% in Q2 of 2018 and 0.1% in the third quarter. More recent data revealed that the volume of retail trade in the euro area fell by 1.6% in December compared to the previous month. Overall, euro area GDP growth will fall from 1.8% in 2018 to 1.5% in 2019. Despite slowing growth, firms should not hold back on investment. Recession risk is still low, and the key for European businesses is to strengthen its competitiveness through innovation and productivity growth. I'm Ilaria Maselli, and this was your Economics Watch brief for Europe.